Okay, Mega team, welcome back to my channel and thanks for tuning into today's video. Now we have a really interesting video today, guys. We're not only going to be taking a look at Bitcoin, we're going to be doing a short-term analysis, but we're going to take a look at something called the presidential election market cycle theory, which basically shows us, or at least analyzes, how the stock market and risk assets perform based on the period of which we are in terms of the presidential cycle. And it takes that data over about 20 different presidential elections over about 80 years to come to an average performance per quarter, or per, what would you say? Per presidential quarter. So let's go ahead and take a look at that. And we'll start with that today, which I think is really interesting. Before we get into it, guys, head to a pinned comment. Click the link down below, join our Telegram channel, get access to all our updates, videos, analysis, and a whole range of more. All the relevant, important updates are posted in here. And obviously, if you're interested in our VIP channel, guys, stick around. We've got a really, really interesting and big announcement coming very, very soon. So if you're interested in VIP, this could be for you. Let's go ahead and watch that video, guys, and we'll start with it. We'll start with this video, then we'll get into the short-term analysis. So first and foremost, shout out to whoever this dude is. I don't know who he is, but obviously on Instagram, if you're on Instagram, go ahead and follow. It's really, really interesting stuff here. I've watched it once already, but I'm sure everyone's going to enjoy it. So I'll click it on play.
So yes, I am a big believer of cycles. I'm trying to pull something up as we're talking. A big believer actually in presidential cycles. You know anything about presidential cycles?
Enlighten us.
Okay, so basically, if you go back and study,
We're in a midterm year.
you're in a midterm year. We'll get to the statistics behind that, which are unbelievable. Okay, if you go back to 1939, the beginning of World War II, this is the 21st midterm election year. Do you know there has never been a negative return from the actual date of the midterm election to June 30th of the following year for the market?
Really?
It's 20 consecutive years.
So Joe is saying get crazy long this November, guys. Okay.
So you've got 6 occurrences where you got greater than 20%. 6 times greater than 20%.
6 out of
20.
Okay.
6 out of 20.
Okay.
So you've got remarkable midterm election statistics, but also a presidential cycle. The 4 years of a presidential cycle, what you generally find is market returns are most difficult in year 2 of that presidential cycle.
Which is now.
In fact, the worst quarter of the 16 possible quarters is year 2, Q2.
Which came true this year.
So that's really interesting, guys. Let's talk about it a bit more. So he said we never see bad returns, and this is over 22, I think he said 22 elections after the midterms for the next few quarters, from October to end of June the following year. And this is basically what we're going to show you on this chart. So first and foremost, that was one of his first points. And his second point was the worst returns that we see are from leading up to the midterms from that second quarter, from April to the start of July or end of June. So I showed you on the Bitcoin chart over here just what that looked like. We got the start of April, start of quarter 2 to the end of quarter 2, 2022. We saw the worst performance in Bitcoin by far, 62.91% drop. This was the worst performance of Bitcoin, the worst performance of altcoins, essentially the worst performance of everything, including the stock market. This was the worst performance. And then he said after the midterms, on average over 80 years and 22 whatever campaigns or whatever it is, presidents, we've seen positive performance after the midterms leading up into that third quarter, following into the end of quarter 2 the following year. And this lines up with a few things. First and foremost, it lines up with our prediction that the periods between, well, first and foremost, it lines up with our prediction that our bottom was actually in. It lines up with a prediction that we can possibly come down and retest this 9-year trend line. And it lines up with a prediction that we do expect a break above this trend line during October. And it lines up with the prediction, that this 9-year trend line will result in that start of that next bull market whenever we break that downward trend. So it does line up pretty well, guys, because we do expect that break in October, breaking this level over here, and the bull market will start if we break 48K over here. But very, very interesting stuff. Obviously, it lines up pretty well with our analysis. And I guess, why does it work like that? Well, I guess there's a lot of uncertainty, a lot of fear moving into midterms, a lot of the unknown, and obviously investors don't like the unknown. So this is why we see really, really bad performance in risk assets, particularly leading into that. Now, we talked a little bit more about everything on the macro We talked about the economy. We talked about all that stuff yesterday in yesterday's video. If you're interested to find out more about that, watch yesterday's video. But I wanted to throw this in here today to get everyone thinking. Let me know down below what you think. Obviously, I don't know too much about the presidential election cycle. I'm not American. I don't follow that kind of stuff. But whoever's following that stuff, whoever knows that stuff, let me know down below what you think. Maybe you've experienced what he's saying. Maybe you've been aware of it. I personally never even heard of it until today. So really, really interesting stuff nonetheless. But let's go ahead and talk about the short term. But the short term isn't looking too amazing. Now we saw a double bottom formation, obviously a bullish divergence over here, push through and up our major resistance at 21,200 to 21,300, and finally push up into our next major daily resistance sitting at 21,600. 21,600 really is a level that we need to break above and get that close above to see a move back up to 28k. If we don't get above 21,600, we won't see that move. Now, the 21,600 has acted as major resistance twice. It acted through resistance between the 25th to 27th of June 2020, a few months ago, and obviously the start to mid-July 2020, obviously a few weeks ago again. Now, like we just said, for us to see a move upwards, we will definitely need to see a break through 21,600 to get that move upwards. Until then, guys, we're looking quite bearish. We got rejected. We're printing some kind of bearish divergence over here, which is not good to see. Moving into what we would see as an ascending channel. Obviously, ascending channels are bearish. If we go ahead and do a measured move from the ascending channel, we can just go ahead and take a whip, apply to the breakdown point. It does suggest a possible retest of $21,000 again if we break down. So keep in mind, guys, that is on the cards. The short term is still looking choppy, and I would say do not be investing too much while we're in this range. This range is not an accumulation range. This range is not a good time to be taking too much risk. All you should be doing here is scalp trading the swings. That is it. Scalp trade the swings, use some leverage, scalp trade the swings, jump in, jump out. Don't look to establish any positions. Altcoins, different position, but for Bitcoin, this is what it's looking like for me. I do expect some volatility to follow in the next few weeks still. Like we come back to our large time frame over here, until we really get that break through this major resistance zone at 24,000, whatever it was, 23,800, and really get some closes above there. There's going to be volatility as the closer we are to the bottom, just like we saw over here. The closer we get to this 9-year trend line, the more volatile the price is going to become. And we need to break over this major buffer zone, this blockage zone, this bottleneck, to actually push upwards and get some movement in the price. But until then, expect this volatility to continue. Expect the sporadic price action to continue, because it is quite sporadic. We have massive wicks of very, very over the top fake outs and fake downs over and over and over. It is very, very difficult time to be trading. That is why I suggest just scalp trading it. That was basically it for me today, guys. I didn't want to do a long video. I don't have a lot of time today, but I hope this update's been interesting. Particularly that video, guys. It's a very, very interesting video. Rewatch the video if you want. Go to the charts, check it out yourself. And I'm going to leave it there. Okay, I'll catch you in tomorrow's video. Cheers. Okay, guys, we're going to be taking a quick look at BitGet, and now BitGet is where I personally trade. I highly recommend sign up to BitGet with the link down below. BitGet is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about BitGet are a few things. Number one, it's non-KYC. Well, KYC is completely optional on BitGet. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. BitGet allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about BitGet, and the biggest reasons why I'm sitting here actually recommending BitGet to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more. KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use BitGet. Anyone from anywhere can sign up to BitGet and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on BitGet to get access to, and you can get access to all of these. If you're in Australia and you want access to futures market and you can't trade futures, you can do it here on BitGet. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to BitGet, go ahead, click that link down below to sign up to BitGet, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.